So this is the 1, 2, 3. Can everybody hear me? I think so. Okay, now we are good to go, I think. 1, 2, 3. Can everybody hear me? All right, everybody. I'm sorry about that. Okay, now we are good to go, I think. I'm sorry about that. And yes, now I'm just going to send the email that to let everybody know that we are good to go for this today's show. We are going to be looking at key economic data on the US today because I feel like we need to have a clear view on where the US dollar is going. So let me just send the email. All right, everybody. So let's start by looking at where the US dollar is trading at right now. Okay, now the email has been sent. And if you just give me 1 second, I need to modify this on social media. I mean, everybody should be able to attend this, this daily edge because I feel that it's quite important. Yeah, I feel it's quite important for us to understand economic data. And what we're going to be doing first, we are going to be looking at the US dollar currency index. You know, just technically speaking, where the US dollar currency index is trading at, and what the levels that I'm looking at. And of course, then we are going to have a discussion on key economic data out of the US and why I do feel that it's time to turn a little bit bullish on the US dollar. All right. Now, the first thing we're going to do is, I'm sorry. The first thing we're going to do is we are going to um, look at the US dollar currency index. Okay. Now, let's have a look at the US dollar currency index, shall we? And this is the DXY, guys. This is the DXY. And well, since yesterday, the DXY hasn't moved. It's being capped by the 98.40 level right here. But what's interesting about this is that yesterday we had inflation data out of the US was good inflation data, but we failed to move higher. Now, if we look back, why is this level so important on the DXY? Now, let's have a look at past price action and let's look at this, all right? Now, if you notice, of course, that this level, guys, is, well, the level that I'm pointing out with the red thick dotted line is a level that I used to have on my charts that I don't have anymore because I don't like to clutter my charts. But I want you to look at this because it's quite important. This is where the US dollar currency or the US dollar was capped to the upside after meeting or after bulls came into the market at this level. We got capped here, and then boom, a huge sell-off to the downside. We managed to break above, but if you look at this, this level has been a pivotal level throughout for the better part of the last couple of months. Since mid-August, it has been a big pivotal level. And right now, we are testing it again. And if we go to the 1 hour chart, guys, well, you can see that it is capping the XY again and again. But the thing about this is that we are indeed making higher highs, all right, higher highs. And what, technically speaking, what a higher high with a capped top means is could, I mean, it's a flat ascending triangle, and technically speaking, this is a continuation pattern. But we are not here to talk about technicals, but we are here to talk about fundamentals. The thing about this is that we are really capped by the 98.40. So yesterday we were talking about the post, we were talking about this big bullish move from the 97.20 to the 98.40, right? That hasn't had any deep retracements, all right, and it hasn't had any deep retracements. So we were kind of having the conversation that this cap to the upside on the US dollar could mean that we were going to be retracing back to this level. And now that would mean that we would, in fact, after making this higher high, make a higher low, which would mean that we could be, in fact, starting a new bullish leg on the US dollar. This hasn't happened yet, and right now the US dollar is very choppy in a very tight range. Still capped by the 98.40 to the upside. Now let's go to the 4-hour chart and let's have a bigger look at what I'm talking about, all right? So not only that, but I mean, if you like Fibonacci retracement levels, I do not use Fibonacci retracement levels, but this must be around the 50, right? Um, Around the 50%. It's exactly the 50% retracement of the entire move to the downside. So technically speaking, there is a lot of big areas here. All right. Now, uh, now, having said that, if we go to the euro US dollar, yesterday we were talking about the possibility of a long trade on the euro US dollar. Why? Because it had hit a major zone of support at the 110 level, and it had hit some very interesting bearish targets. Also, with the view on the US dollar pulling back, this would definitely have triggered a long on the euro US dollar. But as you can see, the euro versus the USD is just uh, uh, um, trading lower and lower, like really grinding lower and lower and lower. So my view on a long trade on the euro USD is no longer valid. Okay, now I remain flat on the euro US dollar for the time being, since we are about to hit the stop losses levels or the invalidation levels for that trade idea to the upside. So having said that, why is gold pushing higher? All right, that is a question that I was asked today on my premium community. Now, if you're not a member of my premium community, you're more than welcome to join us with a 50% off with the link below this video on whatever social media you are watching this. So why is gold trading higher if, in fact, the US dollar seems to be in a boom move? Well, that's quite interesting, actually. I do believe that this is just a pullback to that 1477 zone for a continuation lower. And if you notice correctly, this level right here was a big level for profit taking from shorts that were short from the highs at around the 1505 to 1508 level. All right, like we did. We actually rode this short ourselves with our premium members. That was a great trade, by the way. Now, having said that, where do you guys think the US dollar is going in the short term? Is it going higher? Is it going lower? Are you bullish the US dollar or are you bearish on the US dollar? And you can type your answers on the chat. Uh, if you're watching this on Facebook, you can type it. You can use the chat on Facebook, on YouTube, on even on Twitter. I have all my chats open for you guys at any for any questions. So If and all throughout this daily edge, please, if you have any questions, just type it on the chat. I will be more than happy to answer any questions because we are going to be looking at very key economic data. And if you're not familiar with economic data, it might get a little bit dense for you. But it's very important for us to understand where the US dollar is going if we are in fact planning on trading the US dollar, right? We don't want to be caught in the wrong side of the macro trend. And yeah, we don't want to be caught inside on the wrong side of the macro trend. So let's have a look. Well, let's have a look at some economic data. We're going to start by having a look at the unemployment rate. Uh, and well, the way we're going to structure this, we're going to have a look at labor numbers. Then we're going to have a look at consumer and lending numbers. We have a question from Martin. Do you think general trades are slower at the moment? Yes, the market is slow right now. And the reason the market is slow, I do believe, is because, yeah, I mean, there hasn't been too much, well, key economic data that has been released this week. Today we had, I mean, I can show you. Actually, I'm going to show you. Today we had Eurozone GDP and employment, but this is and we had UK food sales and retail sales ex auto. This actually didn't move the markets too much because yes, this is unemployment. This is employment data and GDP data, but this is not a governmental data that has been released, and I do think that this is the reason that I mean, that moves have been very slow. Just have a look at, I mean, if we have a look at the euro versus the US dollar, one of the slower moving pairs, if you ask me. Let's look at the 50-minute chart, and I mean, just have a look. Today's range is just 24 pips. So yeah, it has been a drag to trade, in my opinion. But I mean, and volume is quite thin. Uh, so when volume comes in, volatility is going to jumpstart. But we have to be patient. I mean, that is what we do, right? We need to be patient when it comes to trading because if we push our trades, we are definitely going to get burned. And that is not what we want to do. So, guys, let's have a look at this key economic data. As I said, we are going to start with an unemployment, and then we're going to have a look at money, consumer, and lending numbers. And I'm going to try to make this round to make a point on my personal bias on the US dollar. All right. If it doesn't make sense to you, you can ask me at any time, whatever you want, because this is very important. Okay. We are trading currencies, and we cannot be trading forex without understanding key economic data. I mean, this is what moves the currency. This is what gives the currency strength and what gives the currency weakness. And if you don't understand this, you are going to get burned. All right. Now, if you're not a premium member, if you want to follow my trades, there's an offer below this video with a 50% off. Use the coupon SAVE50 to get a 50% off your premium membership. Now, then we're going to start with key. I mean, everybody's familiar with the unemployment rate, right? The unemployment rate has been dropping in the United States steadily, steadily, steadily. There's nothing much to say about the unemployment rate other than, well, we've seen, I mean, we have seen it dropped to the lowest levels in over how many, 4 decades or so. Okay, so take a look at this right here. U.S. jobless rate rises to 3.6 in October. Now, when we're looking at economic data, this to me is just noise. Why? Because I don't care if the U.S. jobless rate rose to 3.6 in October, because that that number alone doesn't mean anything without an analysis on or at least on a year-over-year basis. So this number might push some bearishness immediately in the market, but that's it. To me, is just a little bit of noise. Now, if we were going to if we were going to look at jobless claims, let's have a look at jobless claims, and let's see if we can find them. Continuing jobless claims in the United States. To me, I mean, this is, let's look at the 5 year. To me, I mean, the continuous low jobless claims have been steady around this area or this number. So a little jump to the upside really doesn't mean too much. But the thing is that by looking at this chart, you can see that we are kind of topping I mean the labor market on the United States is kind of topping in the sense that its job creation its job creation does not meet the job demand to continually degrade the jobless claims in the country. All right. So this can be a factor of a flag in the sense of the if we're only looking at employment numbers, right? So we are all very much familiar with the unemployment rate. Unemployment rate is well, lowering on the United States, and now we are going to look at the average hourly earnings. Now, this is, to me, this is very important, and the reason that this is very important is because if the unemployment rate is lowering or is decreasing, and the average hourly earnings or average hourly wages in this case are rising, this means that more jobs are being created on the economy, and businesses are paying more on an average for these new jobs, right? And this leads to, I mean, and this makes me look at the strong U.S. economy. Why? Because there are more jobs created, and these jobs are or these people are getting paid more. Okay, so we are having increasing average hourly wages on the United States, while we have a decrease in unemployment rate. Now let's have a look at the wages and salaries growth. This is very nice. I mean, this is a very nice chart on these wages and salaries growth on the United States. Why? Because as you can see, I mean, these are percent changes. Okay, so this what this means is that month over month or the wages in the United States, or week over week, the wages in the United States are increasing steadily. That again is a green light on the U.S. economy in my eyes. And well, we are going. Oh, well, I deleted that. That's fine. Now we are going to look at the consumer price index. This is the key economic data to look at inflation. And as you can see, the consumer price index in the United States is increasingly and steadily rising. Also, whilst the United States personal saving rate is also steadily increasing. Okay, now I'm going to round this up afterwards to make a case for a strong dollar, guys, and this is what why I'm looking at this key economic data. Now, if you look at this, consumer spending on the United States is rising. Personal savings rate is maintaining steadily, and this means that people citizens in the United States or consumers in the United States are not that worried for the future of the economy, since they are spending more and more and saving less and less. All right. Now, this is also a green flag on the US dollar in my eyes. And finally, the United States disposable personal income is steadily increasing and has been steadily increasing for the past year. And that, again, to me, is a green flag on the US dollar. So by having looked at that, and if we go back to the US dollar currency index, all right, and we not only look at the last 2 months, but we go to the daily chart and we look at the entirety of the 2019, and here's the beginning of the year. We have gone from high to low for about an increase of about 4.84%. And this decrease right here, this flag right here, is just this, it's just a flag. So what are we going to be doing with this economic data that we just looked at? And what are we going to be, where are we going to be positioning ourselves? Now that, in my eyes, we are going, just by looking at economic data, I'm not looking at all at monetary policies or fiscal policies. This is just key economic data. And what I'm going to be looking at is at buying the US dollar. All right. So yesterday's long on the Euro USD might have been a little bit riskier in the sense that we were not following the global macro trend on the US dollar, which is bullish. All right. So let's go back to the 4-hour chart and let's have a look at what can we do with our bullishness on the US dollar. All right. Now, if you have any questions, please just type it on the chat. And if you want to follow this every single day, and well, this is what we do. There's a link below this video where you can get 50% off of your premium subscription. So now what are we going to do? Are we going to be selling the US dollar if it breaks with these lows and goes down? I don't think so, guys. I'm really not too keen on positioning myself against the global macro trend. Why? Because even if we break with these lows, let me just thicken this chart out for you. All right. Even I'm sorry. I'm sorry. So even if we break with these lows, all right, and the US dollar starts to pull back, we really don't know how far the US dollar is going to pull back. Are we going to pull back to these levels? Or are we going to pull back to these levels? We have no idea. But what we can be certain about is the bullish direction of these currencies. So if the US dollar starts to go down, I am not going to be a seller of the US dollar. What I'm going to be is I'm going to be waiting for a reaction of this level or a reaction of this level to be a buyer. Why? Because I want to trade the impulse, not the pullback. Okay? Now, let's move forward and let's have a look at at gold, for example, and where can we look at a buy at a long play or a bullish play on the US dollar by selling gold in this case, because you know that gold and the US dollar are negatively correlated, not 100%, but uh, an impulsive move on the US dollar the will have an effect, a contrary effect on gold. So the level that I'm looking at in gold is this one right here, the 1477. Why? Because this was a key level. Now let me just grab this and yeah, and I'm going to color it blue, just like that. Perfect. So this level, as you can see, is where constantly buyers were being found. All right. This was a level that was heavily being protected by buyers. And as you can see right here, once we broke to the downside and sellers swiped all those buy orders, we haven't had a true retest of that level. And that level even comes to this. So we've had a 1, 2, 3, 4 four real tests of that level, and we hadn't had any real retest of that level to the downside as resistance. So so what I'm going to be doing is I'm going to be waiting for price to rise or to rally to that 1476, 1477 level, and I'm going to look for a rejection for a setup to go short on gold. Now, I am a short-term bear in gold. I told you this yesterday, but I will be looking to buy here around the 1434. But given what we have just said on the US dollar, I do believe that this level will give us the best opportunity and the best risk to reward scenario to short this metal. All right. Now let's move on and let's continue. Now let's have a talk and let's have a look at. I mean, there hasn't been too much. I'm going to be completely honest with you. There hasn't been too much movement in the markets. So we might be cutting this one short because we're not going to repeat what we just said yesterday, right? But I mean, let's have a look at crude oil, shall we? Now, let me just delete this and let me thicken this chart out for you guys, right? Now, again, crude just capped to the upside by this level. I mean, I don't even know what level it is. I haven't looked at this chart in a while, so yes, these lows are capping crude to the downside, to the upside. I'm sorry. So big levels right here. Buyers were defending this level. When we broke to the downside, we hadn't had a true retest until now. Now, I haven't looked at the fundamentals of this market, so I'm not going to be uh, giving you a bias right now because this very much depends on outputs and yeah, barrels produced per day and global outputs. Hi, Naresh, how are you? So I'm not going to be giving you a bias because I haven't had a time. I haven't had the time to go through the figures. But if you are a premium subscriber, I am going to send a full on. Research on crude oil to my premium subscribers today through our premium chat. And well, if you're not a premium subscriber and want to have a look at that, there's a link below where you can get 50% off by using the Save 50 coupon at the checkout. That's only $25 for the first month. But just having a look, there is right here a big zone of resistance around the 5765, 5770. These are CFDs. This is the chart of CFDs. So if you're trading, yep, trading economics, Jose. So if you're trading futures, this might be a little off, but the levels are the same. You just have to draw them on your chart. Again, there's actually nothing much to say on crude, but that is being capped to the upside by this level. I do believe that not believe, but I do see a better risk to reward ratio trade to the downside. But again, I wouldn't recommend it because I can't, because one, I won't recommend any trades here on this show, and two, I haven't looked at the fundamentals on this market, so no. And because we are in quite an obvious up move, so if we are in an up move, it's much better to wait for that retracement to trade the upside. But again, if the fundamentals on crude oil point to the downside, I do think that this would be a great opportunity to sell it. But again, I have not looked at them, but I will, and I'll send my assessment to my premium members. Now, I mean, if you don't have any any more questions, I think that I might just turn this show off right now because again, I mean, the markets haven't moved anything at all. I mean, like we saw earlier, the euro versus the US dollar is in a 25 pip range, and we're not going to go through what we just said yesterday. Just a little heads up on this nice currency pair that we have hit a big area on the euro versus the Australian dollar. Now let's have a look at the Aussie first, at the Aussie US dollar. The Aussie versus the USD is in a very bearish move right now. And if we have a look at the euro versus the Australian dollar, the euro versus the Aussie has been in a rally. Now, I'm not saying that this is a good chance to short the euro versus the Australian dollar, but think about what we just saw and our position as US dollar bulls in the short term. And what would that mean to the euro US dollar, or what would that mean to the euro, which leads this currency pair? So, by looking at the at a US dollar strength, we are looking at a euro immediate weakness, which would lead at a weakness on the euro versus the Aussie. And the euro versus the Aussie is at a very interesting level. Again, this is not a trade recommendation. This is just an observation of correlated markets, and that's it. So if you don't have any questions, again, I thank you for joining me. And if you're not a premium member, you can completely subscribe for only 25 bucks the first month. The link is under this video, above this video. It depends on the social media that you are watching, but use the code SAVE50 to save 50%. So until tomorrow, and let's hope that tomorrow we have well, some moves in the market, because if we don't, we might be looking at an even shorter daily edge. So thank you for joining me, and goodbye.